Hey guys, Mike Malarczyk at New Fed Mortgage. So in mid-November, we saw some inflation numbers come in that were lower than expected. And as a result of that, we saw a pretty significant drop in mortgage rates, which was some very needed relief for a lot of home buyers. In one day, we saw rates drop 0.5 to 0.75%. And I have a lot of people ask me, so what does this mean for mortgage interest rates? Is this just a temporary blip, or is this a sign of things to come? Is the Fed starting to pivot? I've got some people asking me, Mike, if I can get an offer in and I can get in at 6%, 5.75%, should I do it, or are rates going to continue to drop through the rest of this year? So in today's video, I want to talk about all of that. And, in my humble opinion, what I see happening the rest of this year and into 2023, and some important things we need to watch out for. Okay, so we have some important dates coming up this month, and we really need to pay attention and keep an eye on them and think about and talk about them. So when it comes to mortgage interest rates, the Federal Reserve controls a lot of this, right? But it's really the inflation numbers that kind of drive what the Fed is or is not going to do. Okay, so first important date I want you to circle for this month is December 13th. That is when November's inflation numbers come out. So 8:30 a.m., December 13th, we're going to get that new inflation number. The very next day, December 14th, is when the Feds are going to announce their next rate hike. So what's important here is not really the fact that we expect that they're going to increase the rates once again. I mean, at this point, it's pretty much a foregone conclusion, and we expect a 50 basis point increase in December, and we are expecting a 25 point increase in February of 2023. But if the Fed gets data on the 13th that says, you know what, inflation's not where we want it to be, we need to go stronger, and they do a 75 basis point increase on the 14th, that's going to move the market. Conversely, if they get another great inflation number like they did a couple weeks ago, and on December 14th, they go down to only 25 basis points, that's going to be market moving as well. And the third thing is if things come in as expected and the Fed does what we expect them to do, which is a 50 basis point hike, we're not going to really see a lot of movement there. So could the events on the 13th and 14th signal a pivot by the Feds? What does that mean? And what are the steps that are considered a pivot, right? Well, generally there's 3 steps. So let's walk it backwards here and take a look at what the 3 steps of a pivot might look like. So step 1 would be a slowdown, right? And we've been doing things like 75 point basis increases. So we go down to 50 basis points, and then we go down to 25 basis points. Okay, so that's the slowdown. Okay, the second step would be to pause altogether. So we have Fed meetings where there are no interest rate hikes at all. Okay, so the Feds, I think they have a target federal funds rate. I think the number is 4.5%. Okay, so once they hit that benchmark, I think we'll see a pause. So for example, let's say that they do 50 points in December, and then they do 25 in February. Then they hit that number. They will probably hit the pause button for the next few meetings where we may see no rate changes at all. Okay, step 3 would be, based on the data that they're getting, based on the direction things are going, would be to pull interest rates back down, right? So I know, not quite as dramatic as the U-turn, but in that instance, we'd be going in the right direction again. And, this is all dependent upon how the inflation numbers come in, right? So I want to go back and talk about in June, the consumer price index was at 9.1%. And that was our peak. That's the highest that we've been this year. Since then, numbers have come down to where we were the last go round. I think it was 7.7%. I think that was the October number. So if in December 13th we see a number that's lower than that 7.7%, It's showing that inflation is continuing to go down, and there's a strong possibility that the Fed could do something like a 25 basis point increase on December 14th. They could still do the 50, but maybe they'll talk about 25 points in February, or maybe they'll talk about no points in February. And that would indicate the beginning of a pause. So if you want to get an idea of where rates are going to go, inflation is going to play a huge role in that. So when those numbers come out on the 13th, we've really got to pay attention to them. We've got to listen to what the Fed's saying, what they're talking about, because that's going to be very important. That's going to kind of give us little clues as to where things may be going. And, over the next few weeks, the Fed's going to have more and more of its members talking about that inflation number, what it means for the markets, what it means for them, and what their strategy is going to be going forward. So that's what we want to look for. Mortgage rates hang in the balance. The December 13th inflation number is going to have a huge impact on what the Fed does and where mortgage rates are headed down the road. So, if you're asking me for my personal opinion, and I've said it before, hear me now, believe me later, I think that inflation numbers will continue to come down and that mortgage interest rates will follow suit. And I don't have a crystal ball or anything, but based on the information that I'm getting and the historical data that I've been reviewing, it would not surprise me at all if by Q2 of next year we see mortgage rates numbers with a 5 in front of them. So there it is. I put it out in the universe, so it's got to happen, right? So I hope that it does anyways. So I hope you guys found this informative, helpful, useful. If you have any questions at all, please reach out to me. I'd love to help you. Mike Malarczyk, New Fed Mortgage. Thanks for watching. Take care.